What's up, everybody? It's Brandon LeCaren here, and today I'm talking about market updates. So the stats are out for January of 2024, and I just want to compare back to last year and kind of show you guys where the market is going. So without further ado, let's jump into it. So first of all, here is my thoughts on the market where it's at right now. Inventory is low, is the gist of it. Interest rates are high, relatively 7%, 7.5% I'm seeing, and the demand is also very high. So what that is going to naturally do is it's going to continue to push home prices up because of that demand and low inventory. Remember, supply and demand is at play here, and that will be the biggest driving factor of the real estate market from here until forever. Because this started in 2008 when new home builders pulled out of the market, and they were responsible for 1 million homes being put on the market every single year. So there's about 3 to 4 million homes that should have been built that was never built, and we're never going to be able to catch up because of labor shortage as well as just material shortages and price of materials going up during the pandemic. It has never come back down fully. I know things say they're coming back down, but they really and truly has not come back down, and they will never come back down to the same prices as they were, right? So let's jump into it. So this is me comparing January 2023 to January of 2024, and I'm just telling you guys what the changes are. So home sales are up. So, in terms of like closed sales volume, it's barely up. I would say it's relatively the same. It's about 0.2%. But the median home prices in the area has gone up by about 7%, which shows an increase, average increase across the board of 7% in value of homes, right? And that's not taking into specifics what each neighborhood is doing or what each zip code is doing. But we saw a median sold price of $500,000 in January 2023, and now that is $535,000. So if you bought a house in 2023, a year ago, you've naturally made $35,000 in equity. So there you go. Now, the cool thing is median days on market is down. So what that means is homes aren't staying on the market longer. And to me, that shows that people are getting used to where the interest rates are at right now. 7% interest rate, and close to 8% in some cases, people are getting used to that. So home days on market for homes are down by 10 days. So it was about 30 days in 2023. And today, it is about 20 days average, median, right? So pending sales are down. Again, that has to do with inventory levels. Active listings down. Again, active listings way down, okay? This is about 11% down is what we're seeing across the DC area. But that tells us that, there's just not enough inventory to really supply. Like, in the media will phrase it in a way that says, oh my gosh, like there's no new home sales are down, blah, blah, blah. But again, if you look at what the available inventory is on the market, of course, like we're going to have less sales because there's less inventory, there's less things to buy, but that's going to push prices up. So please listen to the full picture here and not just listen to part of the picture. The media's job is to scare you, and they do a pretty good job of it. So months of supply is a little bit up, which shows that people are starting to put their homes on the market. Our spring market here starts in January, February. So we're starting to see that months of supply go up to 1.2 compared to 1.02 in 2023. Another thing is showings are down, but that's going to be based on interest rates also being high as well as inventory levels being down. So, of course, the showings is down by 17% year over year, but again, that's going to be based on what happened before, and where we're at. There's less homes to show, so of course showings will be down. So high prices and elevated mortgage rates have not deterred buyers in the DC area, okay? Again, like the median home price went up. It's $535,000, and it's about 7% increase year over year. And I expect that to continue into 2024 and through 2024. I would expect home prices to go up about 8 to 12%. In some areas, it'll probably be closer to 15%. Again, depending on the demand, depending on what's coming here. But yeah, there is going to be a huge, huge push for real estate. So I still believe the best time to buy is right now, because even though interest rates are high, if you can afford, now is the time to buy. Because when interest rates drop, there's a lot of buyers that are waiting on the sidelines that will just jump back into the market, and they just want in. They want to buy a home, but they're waiting for interest rates to drop. So think about what that's going to do. Remember the pandemic? We will see people bid 20, 30, 50, $100,000 on homes that aren't even worth it and waive everything. I was actually talking to a few people this week, and there was 65 offers on homes on one house. There was another one that went $60,000 over asking, no contingencies, and it was a condo. It was a condo. That's the crazy thing about it. So again, you have to look at these things. You have to think about buying right now, because you may have more negotiating power right now with sellers. We were able to just negotiate one where we're getting the seller to pay 3% closing costs to the buyer, and then the buyer is going to use that to pay off some debt, pay down interest rates a little bit, and get a better interest rate. So again, remember to really focus. If you can buy right now, think about it. It's a great time to buy because of the deals that's on the table out there. And remember, inventory is not going to resume. Inventory levels will continue to stay low, and home prices are going to go up. Again, like I said, 7% increase. I expected to see about 8 to 12% this year. Days on market is down. Pending sales are down. Obviously, new listings are also down, but we're starting to see things pick back up. I do believe interest rates will drop this year. It'd probably be in the 5 to 6% interest rate at the end of the year as we get closer to the election. Remember, it is an election year, so this administration will do their best to show that the economy is super strong, and one way to do that is have lowered interest rates. So remember, interest rates will drop, so now is a good time to buy and then refinance later. So inventory is down. We're seeing days on market go down, and there's just like a slew of people that are looking right now. There's people that are looking to get deals, and some of them are able to get deals, and there's people that are still looking, and in hot areas, desirable areas, we're seeing multiple offers. So if you can buy, now's the time. It's just going to get crazier and crazier as we move into the spring market. So anyways, that's your quick market update for the DC metro area. I'm Brandon LeCaren. Thank you guys for watching. Hit that subscribe button below, like, follow, comment, and I'll see you guys on the next video. Peace out.